Hey, good afternoon, everybody. This is Dennis Wilman with the Active Trend Traders. Welcome to the Making Money Trading Stocks, Options, and ETF weekend webinar that we do just prior to the close every Friday, or most Fridays. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise for future performance. A little bit about me. Most of you, I'm looking at who's online today. I know most of everybody here. I want to thank you for joining us today. As you can see, the market has just been absolutely in, it basically zigs up a little bit just so it can sell itself off. We'll be taking a look at that very briefly because I kind of want to answer a couple of questions. There's one, okay, with the market doing what it's doing, how do we trade it now? How do we trade it? Do we just hold off and wait? How do we pick where we think it might turn around? And all those are good. We have to recognize that while trying to choose a bottom can be very, very tricky because we don't want to be catching any falling knives either. And so right now we can look at, if you do take a long trade, there will be a tendency for it to fail to the downside. I want to remind everybody that the objective of this webinar is one very quick, 10 to 15 minutes. We're going to cover a lot of stuff very rapidly, very quickly. If you do have a stock you want us to take a look at, please type it into the chat box so that we can, in fact, take a look at that. And I won't promise I'll get to everything, but if you do have a stock you want us to take a look at, please type that in. So right now we want to forward primal actionable intel review at the end of each week. And so my question is, approach the weekend. Will sell-off lead to solid setups and trades? Of course, that's one of those questions is we'll know it when we see it. We can go off of what tends to happen in the October-November timeframe is we tend to get a year-end rally. But the significance of the sell-off over the past few weeks has, in fact, been just that. It's been significant. It's been different than what we've had over the past little bit. So with that being said, we're going to take a look at the indexes and a couple of stocks and how you can look towards, to be trading it. We're going to look at some stock ETF performance, any bonus trades that we might have. And so here's where we're sitting as of about 9 o'clock this morning. One thing I want to highlight to everybody, the Russell had been basically just behind the NASDAQ in its performance, but look what's happened. It has basically almost gone back to zero return for the year, and from the high from last year, we're down now below it by about a percent. Everything else is fallen off significantly also. NASDAQ composite, if you recall, last week was up closer to like almost 14–15%, and it's not holding. Active trend trading, we are holding, up. Actually, the strategy 3 trade that we do every year, the sell-off has actually benefited it because because of the leaps we have on both Tesla and BABA is working out very, very well. So let's take a real quick look at. I'm going to run through the indexes. Now I'm going to take a look at it from 2 different perspectives, guys. I'm going to take a look at it from both the on 4 different time frames. I want to take a look at monthly, weekly, daily, and intraday. And we'll start over with SPY. Okay. This was the rally that started back in April of this year. As you can see, this is where the Fibonacci is working. As we can see, Fibonacci has dropped all the way down to the 618 retracement. And if we break through that 618, then that increases the probability that we're going to get a total 100% retracement all the way back to 254. Is that a good thing or a bad thing? Well, that takes us right back down into another level of support. And then right below that, closing in on that 1236 retracement, that would provide, or extension, that would provide a level of support, which is at about 247.59. What's different? What do we see that's different in the S&P, the spiders, from, let's say, the sell-off we saw earlier in the year, going back here to January of just this year? Well, one thing that's significant is you get a much larger week down, not getting the rebound back up like we had early in the year. And this is a very classic move I want you to be aware of. One, we basically accelerated up, fell down to the 40-week moving average, equates to the 200-day moving average, did a nice little attempted rally to go back up to the highs, failed, then pulled back down, retested the bottom again, and then went into this nice little move that started from April, lasted until just a couple, about 4 weeks ago in the middle of September timeframe. Now we're selling off, and if price actions on the S&P, or the spiders at S&P, stay below the 40-week moving average, or below over here on the daily chart, the 200-day moving average, what we'll have is an oversold condition, but a fairly significant move down to the downside. What would I be expecting with that? Well, rallies back up into the moving averages, rally back up into the 200, rally back up into the 100. Excuse me just a second. Some kind of rally back up into these moving averages, start to reverse, turn back around, and then go lower, because we have basically just kind of changed the tone, changed the tune of the markets. Get rid of that. So let's go on over to, so that's what's looking now for S&P, and recognize, look up the S&P in relationship to the 200-day moving average. Go over to the Qs. Now, it's kind of interesting is the Qs today, and which represents the NASDAQ composite, basically has come down, and or the NASDAQ 100, excuse me, and actually the 200-day moving average or the 40-week moving average actually held. And so is that a positive? TSI daily chart from a low has started to tick up. We don't have a cross yet. And in fact, we do not have, neither of these are really bullish reversal candlesticks. All we can say is that we found support right there at the 168.50-ish area, which was past support over here, or past resistance and support, and we're getting a bounce. Like the S&P, if we close back below the 40-week moving average or the 200-day moving average, that can be looked at as a sign of weakness moving forward. So we'll keep our eye on that. Again, no action to take yet, simply because we don't have a reversal signal. And so all we would be doing is taking a wild guess about, okay, well, I think it's going to turn around here. Now, if it drops back down below, and here's what you can take a look at. If we drop back down below this level here, the 170 level, if it drops back below it, you could set up a trade to trade it moving back up through that level. And I could have got you into a trade this morning. But again, right now, this is pointed toward the downside, and this any type of little bounce or relief rally would be looked at doing one thing, getting short. And so that's what I'll be looking at least until we get some kind of reversal over here on the weekly chart. Take a look over here at, okay, I want to go here, IWM. Excuse me just a second, I gotta sneeze. There we go. That feels much better. Okay, here we are. The Russell, or IWM, what simulates the Russell. We're moving down, and I want to just take a look over here on the weekly chart. Weekly chart is really closing in towards the lower reversal zone. If we take a look at it, what does it tend to do? You look over time. And if the TSI on a weekly chart gets down to this negative 42, negative 50 level, then often a reversal is, coming. However, it does not mean that the first reversal will per se work. As we see here earlier, this was 2015, first reversal. Got a nice move all the way back up into the moving averages on a weekly chart, then it failed. And this was after we already turned down. It failed, dropped down to a new low. TSI drops down below the 40 again. You get kind of a double bottom on TSI, and then prices took off from there, and then went into just a really nice uptrend from there. So just keep that in mind. We have pushed back down past the negative 25, which had worked to be support in the past. We'll see if that continues on. Do I want to risk, and here was the question I was asking earlier, would I want to, take a chance right here and just say, okay, hey, I'm going to jump on a trade. And what kind of trade could you do? A low risk kind of trade, or a measured risk kind of trade. And what I was looking at is you could do one like this. Let me pop this up. Where'd it go? There it is. And what I've done is basically I said, okay, hey, I'm sitting down here at approximately 152. I could drop this down to 152. There we go. Where would I expect it to run? I'd expect it to run back up to, well, where would we expect it to run? Let's take a real quick measure on that. We've fallen from here to here. Let's throw a fib on that. Down to that level. A 50% retracement would take us up to 162. Excuse me. A 38.2 retracement would take us up to 159. And so I could reach out to the first part of January and throw this trade on, okay? And if I confirm, and soon it'll tell us what so on this particular trade, I have the potential of making $2,000 between now and the close if it closes back above the 160 level. What's my max loss if it remained below where I'm, the 152 area? Well, I would risk $1,900. Well, let's say I don't want to go that high. I can always just adjust the size of my position. Now, at 3 contracts, I'd be looking at $1,200 potential gain, $1,100 potential loss. And if that's still a little bit too frothy, I could drop it down to 2 contracts. What would this be? $832,768. And then finally, if I just wanted to see how this would work, matter of fact, you can throw this on in your paper account just to see what would happen. So here's one contract. Upside, $415. Downside, $385. And so if I put that on, I would be looking at, I'd be looking at selling at closing it if it dropped below the 152 area. And it looks like it's getting ready to drop below the 152 area right now. So anyway, I could redesign that trade over the weekend just to give you an idea of how I could, potentially trade that. I also like and again, if it gets down to the 149.80 to 150 level, that may be the bounce zone. That's where buyers came in the past and pushed it higher. Again, we do not have any type of reversal signal on the TSI on the daily chart. On the weekly chart, excuse me. I've got the two lower level momentum on the market forecast hitting down in the lower reversal zone. However, the longer term intermediate is still working its way down. At the same time, it also is approaching where it tends to bounce on a weekly chart, which is somewhere above the plus 50 line. It's where it tends to bounce. Again, no reversal signal. So in reality, we don't need to do anything at this point other than stand by, wait for the reversal to take place, wait for the momentum shift, and or if we, for the longer term trade, but we would anticipate our expectation that longer term trade would be back up into the moving averages for a rollover, because this is pretty significant here. The other thing I want to point out on these charts is these down weeks over the past couple of weeks, much larger than the down weeks earlier in the year. And so, matter of fact, these are the strongest downside moves that we've seen since going back to, gosh, I want to say 2011, or back in, where'd it go? Yeah, since we, back in 2015, where we dropped down to here. We have to remember, in 2015, how far did we drop? Let's drop, just put when we get into a downward market, I want to know where things are. So from the highs here, I dropped this was a 29% retracement. So 2015, that you could consider that. 2014 and 2015, we had entered, at least on the IWM, a bear market. Where are we at right now with the retracement? We're nowhere near that. Okay, it's pulled down about 12.5%. 12.5%. 20% would be down here about 140-ish. 140-ish. And at that point, you see all this congestion over here. I would anticipate if we got a stronger sell-up, that's where we would at least pause, back up. And so let's go on before, I don't want to run out of time. And there we go. So here's where we're sitting for everything with the active trend trading system, strategies 1, 2, and 3. We closed a gold position that we had done earlier in the year, and it offset the profits we'd made earlier in the year. So right now, my current weekly cash flow has been that dropped down to about $114 per week, which is less than what my objective is. My objective is 500 to 1,000. On our go no go table, basically no setups from this past week. Here's what we've done this week so far. We had a spider trade in for strategy 3, pulled in $217 cash flow on strategy 3 for the month of October. $1,700. I'm going to go in, I think, for the premium members and do a presentation on one of our training sessions coming up that will cover for us. It will cover if you didn't set up strategy 3 at the beginning of the year, how to set it up towards the, for the end of the year. And it's just a different type of spread that you set up, but it works very similarly. You just have to modify your expectations. Waiting for a strategy 2 and a strategy 1 trade. Okay, now here's NASDAQ. Well, what I'm looking for in NASDAQ is for seasonality to kick on. As you can see, September, October, you tend to get a bit of a sell-off with NASDAQ. Is that what we're seeing right now? We'll know when it's over, basically, but it tends to get somewhere in these areas here, between October and November, a reversal that takes it into a year-end rally. I anticipate this for NASDAQ. I'm showing the NASDAQ chart today. However, I also expect something similar for the Russell, which also goes into a nice strong rally into the end of the year. And we have to remember that that year-end rally, the larger the pullback, let's say the Russell is pulled back 12% right now. Well, the good side of that is even if we just recover the 12%, if you're trading TNA or something like that, that would be like a 36% move. So that's excellent. So here's what we're looking for. NASDAQ again, end of year, end of year, end of year. Does it have, the question always comes up is, does it happen every year? And the answer to that is, it has a tendency to happen every year. The magnitude is what, is always the question, is, about that move going in. The other one we're looking at, of course, is gold. As the market is sold off, gold has gone up. And that may be this year-end. I don't think that's part of the year-end run. That's just part of the normal fluctuation in the market. Because the market is sold off, the dollar is sold off also. So I'm looking for somewhere end of October, end of November, at least a more significant move to the upside with gold. So, Eric, did that answer your question? Eric asked a question, I'm expecting a Russell move towards the end of it. Yeah, I am. But it may be, just a relief rally in the context of a downtrend that's just starting. So we may see, third year of a presidential cycle tends to be a little bit weaker. And so it wouldn't surprise me because, the first year of President Trump's, the first year of his presidency, we had more upside than was normal. And going into this year, we've had the market has moved up very, very nicely, hitting on all cylinders. And so, it wouldn't surprise me because there's a conflict that's going on globally that I'm not going to get into right now, but there's a conflict going on globally between what the U.S. economy is trying to do, which is the strongest economy in the world, and what some of the other central banks are doing with their interest rates and this type of thing. And so it's kind of interesting to see how everything's working out. Hey, tomorrow I'm going to have the monthly BAM meeting, October 13th. This will be a webinar meeting. We're going to talk about the last of the fatal flaws of trading and how to fix them. Premium training, technical training, we do that every week for our premium members. All training videos for premium members, all training videos are, I'm in the process of reproducing a lot of these. So I'm going to clean them up and also make them easier to watch and more succinct. The other enhancements, we're in the process, we have actually converted what was our early warning alerts over to our new service called the Market Action Points service. If you are an EWA member, you should have received an email that had a link to a video that explains how what has changed. And so MAPS, and then now we're going to give about a 2-week process for current early warning alerts members to switch over, okay, or just switch over when their current EWA membership expires. And so when it expires, and so to switch over to MAPS. Really offer a very special deal for that. Towards the end of October, I'll be opening up MAPS to to everyone, and giving them the opportunity to be a charter member. And so, yeah, Steve, you should be able to go into the Active Trend Trading website, and you should be able to check and see when that your EWA membership ends. And if you're having trouble with that, just email me, and I'll be glad to look it up for you. What was really surprising is this was the old EWA. Old EWA averaged about 14% per year. MAPS turned out to start averaging about 25, 26% per year. And look how the compounding changes. And this is just trading the non-leveraged IWM ETF. And, it's interesting how that difference of 10% per year, how the compounding effect of that really works. So, okay, my friends, I have about 3 minutes to take a look at another stock. If not, I'm going to say, hey, keep your egg growing, trade wisely, trade profitably. There's my contact on Facebook, Twitter. And we'll be starting up with the premium members final hour in about at the top of the hour. And that's how I spent part of the week with my little granddaughter at Hanama Bay. So until next week, have a great weekend. Aloha, trade well, and prosper. So let's see. Steve wants us to look at RHT. RHT? Sure. And what I didn't do, I'll show IWM. This is the monthly over here. Look at that. It's the largest, largest monthly sell-off. I recognize the month's only halfway over. Largest monthly sell-off for, gosh, going back all the way to 2011. So that's telling us that possibly the personality of the market is in fact changing, and that's okay. The active trend trading system is doing what we want it to do. It has, kept us out of the long stock trades, and that is fine. Those who are following the inverse leverage, we're trying the inverse. You've had opportunities to trade there also, which is a good thing. I think that's one of the things I'm going to really focus on more toward going into the end of the year. Red Hat. Okay, what's Red Hat telling us? Here's a daily. I'll go to the daily weekly on this. Just real briefly, here we go. Okay, downtrend. That is at the bottom of the channel of a downtrend. It's not quite totally at the bottom of the channel, but it's moving in there. I'll just send that in about there. So it looks like it wants to continue to fall down here. It found support where you'd expect it to found support at past support / resistance, the 120 level. Getting a little bit of a rebound there. But like so many of the other entities we're seeing, Steve, it's getting a rebound, and to me, it looks a lot like, hey, we've got a downtrend started. Look for pull-ups back into the moving averages, which that would be the 50, 34, 20, or 8-day moving average. A pull back up into towards the 130. Look for a potential reversal down to the downside. TSI is reversing, yes, but it's reversing from a new low. That tends to be a setup for getting short if you're already in a downtrend. So any other stocks, guys? I'll throw Tesla up here. Tesla is fine, it continues to find support about the 250 level. That 250 level fails, then Tesla's downside potential, I'll just give you a quick snapshot of this. If this fails right there, Tesla's downside potential, and some of you may be going, yeah, I want to see. No, I'm only kidding. Let's see, activate that, activate. Tesla's downside potential is going from about 250. These things are always such a pain in the rear to get synced. There we go, that's close enough, okay. That is pretty close. So it's downside potential. If it fails the 250 level, downside projection could be down to about 100. How long of a period might it take to get down there? Well, things tend to fall about two-thirds as fast as it go up. Therefore, but if we take this movement from this high across here, this formation here, this topping formation, go about halfway, which is about there. And so that would be around the first of the year. So about 9 months from now, 9 to 10 months from now is when you could anticipate Tesla being potentially, if it breaks 250, that it could be down to 100. That would be a shocker, guys. That would be a shocker. So, hey, past my time. I just want to say thank you very much for joining us today. We'll be seeing some of you at the 12 o'clock session, and for the final hour. For those of you who are not premium members, I will be putting out an offer towards the end within the next couple of weeks. That will be the last offering for active trend trading regular premium membership at its current pricing, because next year it goes up. Now, if you're already a member, as I made a promise to everybody when they first join our active trend trading, that whatever membership level, whatever price point your membership is, will never change as long as you stay as an active member. So just want to make that recommitment to you, and also let folks know that when the new pricing comes out at the beginning of the year, or I think it's in December, it will be going up to about $125 a month. So again, if you're already a member, you're not going to have to worry about that. So until later, God bless everybody. Aloha.